My subscribers. How you guys doing? Welcome back. Welcome. So, how would I behave if I was the market? Well, I would screw you all by just selling relentlessly. Period. That's what I would do. I wouldn't even give you a chance to get out. I wouldn't even think about it twice. I would just start selling, not even a tick going upwards, just straight down selling. That's the way. If I was the market, would screw you all. Because for a decade, buy the dip has been the theme. So I've convinced you that this is the way it's always going to be. And no matter what you buy, eventually I'm going to let you off the hook because if you buy the dip, eventually it'll go higher. So we have a whole new generation of fish that we want to drown. Okay? Drown. Yeah, we're going to drown them with water. That's what we're going to do with this new fish. And the way I would do it, that's the way. Just straight down. Boom, like this. I'm talking this kind of move only in a shorter time period. And then I would drag it out. I would make you all puke it up. If they don't scare you out, they'll wear you out. Just sit there and back and forth. Just, you'll hate stocks by the time I'm done with you. That's how I would do it. So this is not useful information that you can go out and trade. That's not the point of this video. The point of this video is I want you to kind of realize, kind of put things in context of the dangers that are out there right now. Okay. Uh, Over a decade of buy the dip has made people so complacent um, that I think that's the way the market would think if I were the market, that I'm just going to sell it and I won't give you a chance to get out. Now, think about it. Let's go back in time and let's talk about stocks. For you to even buy a stock in the olden days, uh, you had to pay like $150 just to make one trade, just to buy, and then $150 to sell. So it was not for the little guy. Then they came up with, okay, you spend $39 to make a trade. Then they said, okay, we're going to make it $20, then $15. Then you're going to do it for free. Anybody can do it. Then all the information is free for everybody. Let's flood all the information into people's mind, make them think that they're doing analysis when they don't even know what the hell they're looking at. But we'll get another bunch of, wannabe experts telling the other, people what this means. Storytellers, witch doctors. And then, we'll convince them that they're doing analysis and they're making good decisions. Um, with Robinhood, you don't even pay. You can buy $1 now. You can buy, I think, 50 cents. I don't know, whatever. I think dollars is, I don't know what it is, but they don't care. They want your money. They want everybody's money. Go ahead, go buy the stocks, right? Oh, I forgot 401ks. Yeah, go buy your 401ks. We'll give you a tax incentive. Don't worry about it. Go ahead, go buy stocks. That's an end game kind of. What are they going to do next, right? They're going to send us money to go buy stocks. That's it. There's nothing left. So be aware of that. Okay, be aware of that. That mechanically, there's not much more room for us to expand and draw in more suckers. Okay, mechanically speaking. So everybody's running around telling you, well, cryptos are worthless. Well, so is fiat. No, but fiat is backed by the government and it's backed by, the assets of that country. Yeah, well, so is crypto. Only it's not one country, it's the whole entire planet. Okay, so again, you can buy as little as whatever, $1. We don't care. Just give us your money. Dollar, dollar. It's like UNICEF over here, right? They want your money. So, what's the other one? Well, we all figured out that government deficits now pump asset prices. Okay, look at that. In the middle of a pandemic, we went extraordinarily bullish, like never before. We had 34-day correction. That's it. And then the government came in with endless of trillions of dollars, lending. Here's free candy for everybody. Yay. And then they want to blame supply chains, the labor force. There's so many job openings. Oh, right. Okay, sure. It's not the money printing. No, no, no. Of course not. Of course not. So we all figured out now the government deficits equals private sector savings, but for the top 5%, and liabilities to the other 95%. So we try to fix an insolvency problem uh, in companies by providing liquidity, and that's not that's not sustainable. What are we going to do now? We go back into another recession, and what is the government going to do? Give more bailouts to the airlines, cruise liners, Avis, Car, Hertz, just give him more more money. Can you make next month's payment? Okay, you're a buy. We can buy this stock. Come on, Johnny, let's go buy it. They're gonna make next month's payment because the government is giving them money. We got all the fools. We got Robinhood. Yeah, yeah. They can buy $1. Don't worry about it. We'll sucker in some more people. Yeah. Well, that's end game stuff. So again, the way I would do it is I would relentlessly sell, and not just scare you out. I would wear you out, baby. I would wear you out. Something like this, and then make you puke it up until you hate stocks. And then people are really going to realize that, oh, you should buy the dip even if there's blood in the street, even if that blood is yours. Then they're going to realize what that means. Because they think now a 2% pullback is like, oh, I'm buying the dip. I'm buying because there's my blood on the street. So I'm doing it. Buy fear, sell greed, and all that stupid BS. They don't know what that means, folks. They don't have a clue. Again, we have a new batch of fish that we're going to drown. We're going to drown them with their own water. Um, Housing ended like that. Well, you got to buy real estate. God is not making any more land. Okay, good luck with that. How many people destroyed their life savings because of that? Right. So this is not 2008. We had a liquidity problem in 2008. 2020, we have an insolvency problem. They're trying to fix the liquidity problem of 2008 in 2020, and it's not going to work. So we have inflation. So what are they going to do? Print more if you go into a recession, right? So everything that seemed to make sense to you today can, I'm not saying it will, can do the complete opposite. Everything that made sense to you suddenly doesn't make sense to you. Inflation could never come again. God forbid. No, there's no inflation. The more we print, the lower the inflation. Look, we've solved it. I've done my 40-year analysis, and sure enough, every time we print money, interest rates go lower. We've solved the problem. Yay. And here we are, 2021. We have 6.8% inflation. Now what? Well, I don't know. We'll taper a little bit faster. We're going to raise interest rates maybe 2, 3 times. I don't know. Get it up to 0.75. Maybe 1%, God forbid. But don't worry, over the long term, it's going to flatten out, come back down 2%. Right. But the damage is already done. You never saw inflation coming. You never anticipated it. You never prepared for it. You never acted on it. So why would anybody take the central bank's word for it? Well, I'm looking at the 5-year, year over year prediction on interest rates where they will be 5 years from now, and then 10 years from now, and 30 years from now, and it's telling me that's analysis? That's guessing, right? Did the 2-year and 5-year and 10-year and 30-year tell you that we're going to have 6.8% inflation, that it was pricing in 5 years ago, 10 years ago? No, no, right? So that's not analysis. So be careful. This is not. Again, we don't have a bearish signal. You can't really use this information. I just want to make you aware what I would do if I was the market. But I want to put a little fire under your butt. Kind of think about these things a little bit, because the way the market is behaving is like a bear market. Only in a bear market, it goes much, much lower very quickly. You don't have time to react. And then it bounces. And then it goes back down even lower and then lower. And it'll happen in a day. You'll be up 2.5% in the morning, down 2.5% by market close. That's a bear market. And if you think anybody can really be an expert and explain it to you how it works, good luck. Who predicted that the market would go straight up, straight down, straight up again, straight back down again, straight up again? Nobody. You gotta be crazy, right? So a lot of people are getting hurt. A lot of people are getting hurt in this market, and they're being fooled by the index, okay, because it's near all-time highs. People are blowing out their accounts. Um, this whole range is 5.5%. That is an extraordinarily big range for the markets to be going up and down, being thrown around. We're talking about trillions of dollars, and it's not just stocks, right? So please be careful, be cautious. Um, if we do get a bearish signal, believe me, I'll be the first one to tell you, but we're not there yet. All right, guys. So that's it for this video. Thank you for your support. Finally, I made it to 700. Yay! 702. Woo! Thank you, guys. I appreciate it. I did post today Apple short setup. Okay. This is a classic topping pattern. Look for lower prices here. Corporate profits, I don't think they can sustain as high as they are. I would look for them to start to go down. This, buy now and maybe pay later thing. Again, that was a short setup. It's doing fine for now. Inflation. Look at it's much worse than what CPI indicates, obviously, right? So home prices are up 19.5, import prices up 10%. And that's another argument that I won't get into now, but people are like, well, we're exporting dollars to the rest of the world, so that's disinflationary by importing, right? We give them the little pieces of paper and we get the real goods and services. Yeah. Well, it's not disinflationary when import prices are rising 10%. Okay? That's not the way it works. I producer price index, what companies are paying for, it's up 9.6% inflation. Now that's very difficult for small companies, right, that don't have pricing power. They're getting squeezed and they can't pass it off to customers. You see the problem? And you have an insolvency problem coming out of COVID. This is not good. I'll tell you that much. And PCE is 5.1. All right, so it's way above the Fed's target. Way above the Fed's target. Sorry. So that's it for this video. Be careful, please. All right. All right. Thanks a lot, guys. Take good care, and I'll talk to you soon. Bye-bye.